大家好，欢迎来到大脑透镜，我们致力于过滤垃圾信息，挖掘优质内容。今天是2025年5月20日，我们来分享币圈大名鼎鼎的微策略，也就是 Microstrategy 公司的创始人兼董事长迈克尔·塞勒的一个演讲。我们将花几分钟的时间给大家分享他这个演讲的要点，随后附上中文 AI 语音完整版和英文原声的完整版。他说，现在美国资本市场有一个大问题，就是科技七巨头胜出的代价是大量相关企业的倒闭和消失。七巨头占据优势，而4亿家公司中最顶尖的500家却举步维艰。这让我想起了沃尔玛。沃尔玛的崛起后面是大量小店的倒闭，是一个非常相似的情形。一代人的模式嘛，新模式的诞生，淘汰一代人，就是这么残酷啊。他说，多数上市公司成为僵尸企业，缺乏流动性，无法跑赢标普指数。传统资本市场的结构存在排他性和精英主义，而中小企业很不容易。这和中国的北交所科创板现在的情形非常像，大部分没有流动性，没有交易，可能还需要做市商去搅动搅动。从回报的角度，他说，仅仅 15% 的公开发行股票能在10年中跑赢标普指数。股市中所有的财富创造仅仅来自于 4% 的上市公司，财富集中在极少数公司中，而七巨头的表现远超其他公司，因此市场存在极端的不均衡。他还说，为了剔除波动性，公司采取回购股票、发放股息等等策略，而这些做法扼杀了公司的增长潜力和未来。怎么才能走出困境呢？塞勒表示，人工智能虽然吸引人，但不是问题的解决方案。AI 是必要的，但非充分。这里我非常认同啊， AI 作为一种工具，绝不是万能的钥匙啊。我们可能把 AI 吹过头了，当成了万金油，好像哪里有问题都可以，这是不可能的。既然 AI 不是解决方案，那什么是解决方案呢？他说，比特币与共识性技术不同，比特币是颠覆性技术，它有作为数字资本具有的独特价值。他表示，大多数人尚未认识到这一点。他说，企业要突破困境，需要有勇气承认现实，并积极拥抱比特币这一新概念。他说，从货币的不同使用场景来看，比特币在资本资产层级中位于最顶端，它具有独特优势，是比黄金更好的黄金，是终极的资本资产。他列举了数据，比特币长期跑赢所有资产，回报率很高，过去5年的年化回报约 56%，10年的回报率仍然达到 10%。 我刚刚算了一下，过去5年的回报率到目前为止，也就是2025年5月，大约是 62% 啊，年化回报率 62% 是相当惊人。从我自己的投资来看也是这样啊，目前来看虽然不多，但是回报率最高的就是加密货币啊，的确会带来心跳的感觉，和指数基金是完全不同的方向和心路历程。他说2020年的时候，微策略特立独行，大规模购买比特币，股价从12美元涨到394美元，日交易量、期权市场未平仓合约大幅度增长。现在上市公司逐渐认识到比特币的价值，纷纷将其纳入资产负债表。到2025年，全球已经有70家上市公司持有价值685亿美元的比特币。他说，企业发行比特币支持证券表现非常优异，可转债综合回报率达到 62%。 巨头企业可能因为自身优势无需改变，但中小企业面临困境，比特币为他们提供了逆袭的机会。他说，只有迫切需求的企业才能真正领悟到比特币的价值。这也是说他自己啊，当年他的企业是遇到了很大的麻烦，某种程度上是被迫走上这条路。他说他曾试图说服微软配置比特币，但是微软的董事会 99% 投票反对。当然人家不会干了，人家在现有的生态系统里面赚得盆满钵满，干嘛来冒险？那维护现有的生态系统和优势才是微软的重点事项嘛。似乎对个人也是这样啊，如果已经积累财富了，可能就是倾向于维持现状，但是对门外的人来说，市场上的确还是有一些逆袭的机会。好，核心要点我们就分享到这里，接下来是 AI 的中文语音完整版和英文演讲的原声。
我非常高兴今天有机会和大家谈谈我最喜欢的主题——企业比特币。 为什么公司需要对比特币进行资本重组？在准备本次演讲时，我让我优秀的财务团队以及3位专注的人工智能助理共同进行了大量研究，以便今天能向大家解释这个主题。首先，我想从每家公司都面临的挑战说起。如果你生活在21世纪，你会知道市场上的赢家是数字垄断企业，苹果在赢， Meta 在赢，谷歌在赢，微软在赢，亚马逊在赢。但这种现象背后有一个令人不安的事实：亚马逊赢的代价是2万家零售商不得不倒闭，苹果赢的代价是2万家设备制造商不得不出局，谷歌赢的代价是2万家新闻机构、媒体和报纸不得不消失。从这张图表中可以看到，科技七巨头显然占据了上风。全球4亿家公司中，最顶尖的500家企业正被科技七巨头远远甩在后面，他们举步维艰。我在公开市场待了很多年，如果一家上市公司无法实现每年15%或更高的有机增长，机构投资者就会失去兴趣，其股票流动性会枯竭，股权价值会蒸发，期权市场也会消失。我还记得，曾经每个人都梦想着，我迫不及待要上市，创办公司的人都认为只要能上市就成功了。但我想说的是，上市只是下一步，而现实是，即使你成功上市，除非能跟上科技七巨头的步伐，否则依然难以立足。从另一个角度看，当今的公开市场，大多数上市公司我称之为僵尸企业，他们缺乏流动性，没有期权市场，无法跑赢标普指数，无法留存收益，无法筹集资本，也无法承担风险。他们被困在一个资本有毒、波动性有毒、通胀有毒的范式中，这就是我们面临的困境。看看过去20年的上市公司名单，你就能看到这种困境的演变。这是美国的上市公司数量变化，它们正逐渐萎缩。这不是一张代表成功的图表。如果在现代社会看到一张向右下方倾斜的图表，你会认为这是失败，或是逐渐滑向萎靡的过程。我们正在失去创造健康企业的能力。而且这不仅限于上市公司。如果对全球所有企业做一个统计，全球约有4亿家公司，其中遍布着小型私营企业，有40万家大型私营企业，全球有4万家上市公司，美国主要交易所纳斯达克、纽约证券交易所等有4000家上市公司，其中400家属于成熟发行人。请问在座有多少人知道成熟发行人是什么？我很好奇，今天你们将学到一个新知识。成熟发行人指的是被认为足够成熟，可以向美国证监会提交注册声明，并在当天发行证券的上市公司。换句话说，全球4亿家公司中，只有400家能在美国这个全球最大的资本市场毫无阻碍地筹集资金。这似乎并不公平，400家100万分之一的概率。事实上，美国只有0.06%的企业能够进入资本市场。如果你在经营企业时举步维艰，传统观念会说，如果你更优秀、更努力，就能成功。但事实是，传统资本市场的结构本质上是排他性和精英主义的。这种现象可以追溯到几千年前，具体可追溯到1933年和1940年的证券法。当时该法案的目的是将所谓过于创新的企业排除在资本市场之外。以下是关于公开交易股票的残酷事实。如果将视野从纽约证券交易所和纳斯达克扩展到所有场外交易的公开证券，在1.2万只股票中，只有15%能在10年内跑赢标普指数，12%的股票日交易量超过1000万美元。美国股市83%的交易量集中在100只股票上。当你看 CNBC 时，看到的总是英伟达、苹果、谷歌、Meta。人们讨论的都是这些股票 ETF 市场观点，偶尔提到黄金和比特币。如果你的公司不在这个名单上，就永远不会出现在电视上，因为媒体知道观众只关注这100只股票。只有8%的公司拥有期权市场。更残酷的是，股市中所有的财富创造仅来自4%的上市公司，96%的公司表现等同于国债收益率。这很残酷，对吧？96%的公司无法跑赢国债。看这张标普指数成分股的表现分布图。科技七巨头在过去4年上涨了221%，标普指数上涨了67%，而96%的标普成分股表现不及科技七巨头，68%的公司无法跑赢指数。比特币是为剩下的96%准备的。如果你不是苹果、谷歌、微软，就需要制定新策略，而显然，仅更努力是不够的。从市值分布来看， 标普成分股的平均市值为350亿美元，而科技七巨头的平均市值为2.4万亿美元，几乎是前者的100倍。所谓的大型成功企业，规模仅为赢家的1%至2%。再看流动性，以市值占比衡量，标普公司的平均日流动性为市值的1%，而我们公司的流动性高达7%，远超平均水平。关于波动性，商学院教导我们波动性是坏事，于是所有人从商学院毕业时都肩负着从资产负债表中剔除波动性的使命，并穷尽一生从利润表中剔除波动性。他们几乎成功了，看看有多少公司的波动性低于标普指数。但有趣的是，所有你敬仰的富人，他们的资产波动性都高于标普指数，因为他们从未试图剔除资产负债表中的波动性。伯纳德·阿诺特、杰夫·贝佐斯、马克·扎克伯格、埃隆·马斯克，这些我们向往成为的人都承受着巨大的波动性。然而，世界上这些经营良好的公司却在竭力剔除自身的波动性。剔除波动性的首要方法是什么？答案是散尽所有资金。如果你想剔除家庭资产负债表的波动性，就把财富捐给慈善机构；如果你想剔除公司的波动性，就把所有资本和现金流用于回购股票、发放股息或转移给他人。这确实有效，但当你这样描述时，会发现这几乎是荒谬的。我的策略是散尽财富，这样就不用担心失去它了。想想看，这是未平仓合约期权市场兴趣的分布图。特斯拉、英伟达等公司的未平仓合约占市值比例较高，人们阅读他们的新闻，猜测他们的前景，传播他们的八卦，因此有交易的欲望。但对标普500指数的大多数成分股来说，未平仓合约规模极小，许多中小型公司甚至没有期权市场，市值数十亿美元的公司却没有期权交易。顺便说一句，如果你采取剔除资产负债表所有波动性的策略，就永远不可能像埃隆·马斯克或杰夫·贝佐斯那样意外赚取500亿美元。你持有的资产永远不会意外上涨。如果你的策略是从利润表中剔除所有波动性，比如让客户签订3年期企业协议并提前1年续约，加上 CPI 或 PPI 调价条款，那么问题来了，投资者为何要交易你的股票？他们只需每年关注一次，做一次决策，然后遗忘。在这种情况下，唯一的波动性只会是负面的。当问题出现时，这种策略如何影响公司表现？请注意，通过剔除资产负债表和利润表的波动性，公司实际上也剔除了增长潜力。我们公司的策略在这张图中显得格外突出，虽有少数亮点，但大多数头部500强企业仍在挣扎。换句话说，大多数公司在竞争中举步维艰，正慢慢走向衰落。85%的美国上市公司期权交易量不足1000万美元，75%的公司日交易量不足1000万美元，85%的公司注定跑输标普500指数。如果你在这样的公司工作，或是公司管理者，或是希望创办企业，问题在于如何突破困局，如何克服这种结构性劣势。全世界都在谈论人工智能。如果在街上随机询问100人，你认为人工智能是个好主意吗？大多数人会说是。每位 CEO 都有 AI 计划，每位投资者都想知道你的 AI 策略。AI 很吸引人，很有趣，也很关键，但它不是问题的解决方案。为什么？首先，因为所有人都认同应该使用 AI， 这是一个共识性想法。所有人都认为应该用 AI 降低成本、改进产品、拓展业务。但这意味着4亿家企业都在同时使用相同的技术，做相同的事情。你的竞争优势在哪里？ AI 的结果将是富人更富，名人更有名，强者更强。这将极大惠及微软、苹果、谷歌以及所有名人，比如汤姆·克鲁斯。如果你拥有知名品牌或分销渠道，你将成为受益者。但如果你试图创业，可能会有1万甚至10万家 AI 初创企业诞生，其中极少数会成为独角兽，这里指1/1000的成功概率，失败率可能高达 99.9%， 甚至 99.99%。这些极少数成功的 AI 独角兽将颠覆整个行业，摧毁数千家公司，改变世界，比如机器人制造机器人，或某个产品取代18.7万名会计师的工作。但坏消息是，你的公司更可能成为这一趋势的受害者，而非受益者。归根结底， AI 是一台压路机，正在碾压而来。如果你不是独角兽，不是数字垄断企业，不是所在国家或行业的头部企业， AI 只会让富者愈富，强者愈强，而你只会被碾压。 共识性思维无法提升普通企业的竞争力 ，AI 是必要条件，但非充分条件。10年后，不拥抱 AI 的企业将无法生存，这是必然。但仅靠 AI 无法拯救你的企业，比特币才是解决方案。为什么？因为很少有人认同这一点，大多数人不认为比特币能解决企业困境，很少有人同意用比特币为企业注资。你不必相信我的话，大可上街询问100位富有的高学历人士或任何商学院教授，他们大多会说，听起来太冒险，不是好主意，会增加风险。但如果你问他们，我是否应该在初创企业中使用 AI？ 他们会毫不犹豫地说，当然。共识性技术是数字智能，而颠覆性技术是数字资本。数字资本能拯救你的公司，因为其他人尚未理解它，主流尚未接受它，而你可以成为先行者。用彼得蒂尔的话来说，这可能是我今天在屏幕上展示的最重要的一句话：勇气比天赋更稀缺。地球上有80亿人，我能找到8000个100万里挑一的天才，但找不到8000家有勇气实践我所说策略的企业。你可能自认为智商200，但高智商的人在这个世界上做什么？他们能想出100个不买比特币的理由，能写出列举所有可能出错的情况，能假设10年后某场景下可能出现的问题，然后以此为借口不行动。缺乏勇气的人会用才华来为拒绝冒险找借口，这无关聪明，而是关乎勇气。成功源于承认现实的意愿。我刚才展示的就是现实。你的企业能突然开始每年增长20%，并超越科技七巨头吗？如果不承认这一现实，就无法拥抱新想法。你在现状中无法赢，需要范式转换，拥抱新想法，然后付诸行动。行动需要大量学习、研究和规划，在所有准备之后，你需要承担风险，并且执行。突破困局的路径是承认现实，拥抱想法，付诸行动，承担风险，执行落地。付诸行动意味着什么？你一生可能工作40年，8万小时努力赚钱，但讽刺的是，每个人都愿意花8万小时工作，却很难花100小时学习如何保存赚来的钱。但我的建议是，花100小时学习如何保存你用8万小时赚来的财富。如果你是一家拥有1万名员工的公司 CEO， 请想象，1万人乘8万小时的辛勤工作，最终却失去所有财富。这正是当今世界正在发生的事，在经济中反复上演。花100小时学习如何反驳人们提出的各种质疑，我担心这个，我担心那个，中本聪是不是 CIA 的人？如果邪恶博士搞到量子计算机怎么办？当人们不再说比特币是郁金香泡沫时，他们会转而说这太好了，不可能是真的，政府会把它夺走。这就是典型的聪明反被聪明误的反驳。他们认为，如果比特币真能解决所有问题，那它太好了，必有隐忧，比我强大的人会夺走它，所以我还是不尝试了。经过深入思考，你会发现货币可分解为资本和货币、流通货币。传统思维会告诉你，货币是交换媒介、记账单位、价值储存手段，然后就此打住，仿佛已经解决了问题。但事实是，货币分为高频货币和低频货币。若需在未来4周内使用货币，可能会选择阿根廷比索高频货币；若需持有4周至4年，会选择美元世界储备货币中等流通频率。若需持有10年至40年，会选择房地产、黄金、股权等资产；若需持有10年至100年，则需要一种持久的资产，如比特币。从这个维度看，货币的一端是资本，长期价值储存，可传承给子孙后代；另一端是流通货币，高频便捷的交换媒介。资本资产存在层级结构，从弱货币、强势主权债务、强货币、投资级债券、60-40投资组合、标普指数到商业地产，而比特币位于这一层级的顶端。所有研究此领域的人几乎都得出结论：比特币是比黄金更好的黄金，比特币是比实物资产更好的财产，比特币是比任何公司股票更好的科技股权投资，比特币是终极资本资产。如果你无法从第一性原理推导这一点，只需看看市场指数。右侧是罗素2000指数小型股的表现。若你是罗素2000成分股公司，用现金流回购自家股票，统计上只能获得5%的回报，不如直接买入标普指数。标普成分股公司回购股票的平均回报为10%，而科技七巨头回购股票的回报达31%，因他们本身跑赢标普。 但没有人能获得比特币79%的回报。如果是罗素2000公司，与其回购股票5%回报，不如买入比特币79%回报；与其发放股息，不如用现金流购买比特币。这相当于以1倍营收买入一家年增长79%的公司。如果有机会以1倍营收收购一家年增长80%的全球数字垄断企业，哪家公司会拒绝？所有人都会抢着做，因为这是明摆着的机会。你可能认为我挑选了特定时间段的数据，但这是比特币在每一个10年周期的表现，从2008至2018到2014至2025，它持续跑赢所有资产，其最差的10年回报率仍有50%。如果雇佣全球最聪明的基金经理管理资金，能否超越比特币？看看常春藤盟校捐赠基金的表现，哈佛、耶鲁、斯坦福、MIT 的基金经理们，其回报率比标普指数低3%。换句话说，如果他们什么都不做，直接投资标普指数，业绩能提升50%。这些天才大脑大多无法超越简单的指数，反而在摧毁价值。而比特币在长期内持续击败所有策略，没有任何对手能与之媲美。比特币是什么？它是创造股东价值的最佳策略，是发展公司的最佳策略，是为投资者赚钱的最佳策略，是让公司永续经营的最佳策略。第二好的策略是什么？或许是祈祷自己成为英伟达，但根本没有第二好的策略。过去5年左右，比特币年均回报约56%。最差的策略是什么？购买长期主权债券。在美国，硅谷银行就因持有长期国债破产，多数银行若没有美联储的豁免，早已资不抵债。讽刺的是，政府甚至强制要求银行将国债作为资本资产。资本市场的监管规则本质上阻止了企业通过证券实现资本优化。这就是为什么谷歌不能购买标普指数，为什么企业不能购买股票组合。1933年，证券法从体系中剔除了这种可能。正如罗斯巴德在《自由的构想》中所述，这背后是华盛顿的政治博弈，洛克菲勒集团与摩根集团的利益争夺，最终洛克菲勒集团胜出。而罗斯福作为倾向中央计划的社会主义者，借此将纽约的银行家和资本家纳入掌控，实现资本市场的集中控制。其中一个简单手段就是禁止上市公司购买其他上市公司的股票。从图表中可以看到，大多数公司若当初购买黄金并进行资本配置，表现会更好。黄金是19世纪的价值储存资产，但他们无法投资标普500或科技7巨头。如今，企业面临的选择是，要么持有零收益的短期国债，要么持有比特币55%至56%回报。如果你是黄金信徒，可以买黄金，但市场对此没有共识，历史上也从未成为主流。比特币恰好是表现最佳的非相关性资产，与风险资产低相关，夏普比率最高。上述所有因素共同推动了一个趋势，越来越多上市公司开始购买比特币，并将其列入资产负债表。2020年，我们成为首家大规模购买比特币的公司。如今，全球已有70家上市公司持有685亿美元比特币，每周、每月都有新公司加入。这让我想到 MicroStrategy 的故事。2020年8月，我们正式现实，尝试了所有策略：股票回购、巨额营销投入、扩张销售团队、研发新技术、启动数十个新业务并关闭，但都失败了。当疫情封锁来临时，我们意识到面前只有3条路：快速死亡、缓慢死亡或承担风险。于是，我们决定冒险。当我们决定冒险时，公司股价约为每股1美元，其中6美元是现金，因此企业价值仅为6美元。而制作这张幻灯片时，我们的股价已达394美元。可以看到，当时我们本可以以6至8美元的企业价值出售公司，或者冒险拥抱新想法，我们选择了后者。此前我们的日交易量为500万美元，如今达到59亿美元。期权市场的未平仓合约从100万美元激增至960亿美元。曾经的我们毫无波动性，可预测到毫无吸引力。尽管我们每年在5亿美元营收中能产生7500万美元现金流，但本质上仍是一家僵尸企业。公司运营并不差，甚至很高效，但当你与微软正面对抗时，就会发现微软对全球所有企业都有绝对掌控力。我想说，对美国公司而言，离开美国可能比摆脱微软更容易。想想看，这就是垄断巨头的力量。我们从2.5亿美元的初始投入开始， 坚持至今，资本市场用260亿美元的新增股权价值回报了我们。事实上，从2.5亿美元起步，我们已成功筹集375亿美元资本，这是清晰的愿景、坚定的信念、无畏的勇气与持续的投入共同作用的结果。你会发现，当你勇敢前行时，客户会支持你，投资者会支持你，资本市场也会支持你。如今，科技七巨头几乎垄断一切，大多数投资者对其过度持仓，迫切需要寻找其他投资标的。但你知道吗？那些伟大公司的 CFO 们在吹嘘什么？他们炫耀自己如何放弃资本，大肆宣扬今年将回购多少股票，仿佛在说：我们打造了全球最伟大的公司，坐拥海量资金，却不知如何使用，只能返还给投资者。于是，作为投资者，你每年从微软、苹果、英伟达等公司获得数千亿美元资本，必须寻找新的投资去向，而我们的公司就成为了资本的新流向。这就是非共识思维的力量。当其他优秀公司竭力散尽资金时，投资者必须寻找出口，而我们主动吸引资本，与那些排斥资本的公司形成鲜明对比。这种差异在2024年尤为明显。我们2020年营收5亿美元，年利润5000至7000万美元，而去年融资226亿美元，今年至今已融资101亿美元。谁在给我们钱？投资者。为什么？因为他们想赚钱。而苹果、Meta、英伟达等巨头不想要他们的钱，其他公司又无法对抗垄断，投资者急需一个高增长、快节奏的数字垄断独角兽来承载资金。而我的观点是，只要与比特币合并，你的公司就能成为这样的独角兽。我们正是通过与比特币合并实现转型，这种合并以1倍营收估值进行，且可随时逆转。你可以购买1亿、1000万、10亿美元比特币，明年再买5亿、2000万，甚至尼日利亚的出租车司机都可以购买27美元比特币。合并规模完全可控，交易费用合理，回报更是惊人。正如我所说，想让资产增值10倍，买比特币；想增值100倍，用别人的钱买比特币；想增值1000倍，用别人的钱加杠杆买比特币。这并不复杂，甚至在我看来毫无风险，只是颠覆传统。这是我们4年半的成果。除了英伟达凭借 AI 创新，没有任何公司能超越比特币的回报，全球499家其他公司均被甩在身后。如果你无法复制英伟达，就与比特币合并。当实体企业与比特币结合，优势在于可通过公开市场发行股票或债券，投资者对证券的偏好高于大宗商品。我们不仅在4年半中领先，过去12个月同样如此，标普上涨12%，我们上涨249%，长期债券仅上涨2%。即便是谷歌这样的伟大公司，也无法保证股价持续上涨，企业面临税收负担、贸易壁垒、反垄断诉讼、工会压力等多重阻力。越成功越容易成为众矢之的，而与没有 CEO 的去中心化网络比特币合作才是明智之选。过去12周，我们经历了关税恐慌，但比特币从不被征收关税，这就是关键。大多数公司举步维艰，正因他们做了太多事。套用史蒂夫·乔布斯的话，做事被严重高估了。你做的事越多，面临火灾、洪水、战争、关税、供应链中断、监管政策、政治博弈等风险的概率就越高。看看我们的成绩单，过去5年，我们是标普500中回报第1的公司，拥有加密领域最大的期权市场，波动率、比特币持仓量均居首位，日交易量达60亿美元。企业还有一个独特优势，可以发行证券，而个人、信托、机构无法做到。公司能发行可转债、垃圾债、投资级债券、优先股、普通股、认股权证等，这些证券需求旺盛。如图所示，用比特币背书的债券表现惊人，我们的可转债综合回报率达62%，超越比特币本身。比特币虽是全球波动性最大的资产，但可转债通过下行保护机制实现更高回报，这对比标普或纳斯达克指数5至7倍差距极具吸引力。反观其他债券，挣扎求生的公司发行的高收益债回报率仅7%，落后55%，普通可转债仅4%，投资级债券仅1%。作为上市公司，我们能做到这些，你的公司也可以。从风险回报矩阵看，实体企业发行的股票具有波动性，吸引交易，而投资者为追求低风险高收益会购买可转债等工具， 为风险厌恶型投资者提供了进入加密经济的通道。他们可承担10%至50%的风险，享受半额波动率，甚至获得保底收益。市场需求巨大。当企业采用比特币标准，就能发行比特币背书的证券，而全球现有500万亿美元法币背书的传统证券，如前所述，股票、债券、优先股等表现均不佳，急需颠覆性创新。谈谈微软的案例，全球最伟大的公司是谁？或许是微软。过去1至10年，微软本质上在向全球企业出售商业流程许可，不依赖硬件，可随时更换芯片，供应链简单，客户信用良好。通过企业协议强制绑定用户，你别无选择，是一家运营高效、高增长、高利润的公司。即便遭遇危机，只需向现有客户涨价即可转嫁成本。4个月前，2023年12月，我有机会向微软董事会阐述比特币战略，提出一项股东决议。建议微软研究比特币作为国库资产的可行性，并获得3分钟发言机会。我对他们说，不要错过下一波浪潮，数字资本就是下一波浪潮，它以62%的年增速扩张，即将超越你们，成为全球最受关注的资产。数亿人正在讨论它。21世纪最伟大的数字变革是资本的数字化，而微软本应引领这场变革。全球900万亿美元资产中，比特币占2万亿。资本分为长期资本、保值资产和功能性资产、生产资料，但长期资本正被税收、通胀、关税、监管、反垄断等风险因素摧毁，因此正加速向数字资本迁移。网络空间没有火灾、飓风、关税和战争，能避免政客掠夺、战争摧毁或意外损失。比特币的成功基于一个简单前提：全球聪明人都想保住自己的钱。谁在购买比特币？全球的聪明钱都在买入这个数字网络来保值。数字资本优于实体资本，数字建筑比物理建筑更好。没有可见的实体，就没有租金管制、天气破坏，兼具不可摧毁性、永恒性和可传输性，集所有优势于一身。比特币是不朽资产，可存续1000年，想保值3年，用垃圾货币；想保值10年，用强势货币；想保值50年，买公司股票或房产，但需担惊受怕半个世纪。想保值500年，唯有比特币，它是人类历史上寿命最长的资本资产。谁不想永远富有？比特币代表经济永生，让公司超越平均10至15年的寿命。试想，如果孩子12岁夭折，你会认为这是健康问题吗？如今企业短寿，就像饮用有毒资本的脏水，而比特币是干净水源，能让企业活到90岁。比特币正从2万亿增长至200万亿，即便达到200万亿，规模仍小于股票、房地产和债券，但它将成为瞩目的全球货币资产，是数字黄金，比黄金好10倍甚至100倍，也是全球最强大、安全的计算机网络。在21世纪，创造数字商品就应将其置于计算机网络、用电和算力保护，向全球传播。这就是比特币数字资本的终极形态。一切数字化的事物都更优，数字照片、数字社交、数字文档、数字视频。问问柯达和保利来就知道数字化有多好。微软应被数字资本驱动，而比特币是表现最佳的非相关性资产，能让资产负债表不与任何事物绑定。时间刚刚过去33分钟，大佬透镜提醒您起身喝杯水，稍事休息再来。我们来看一组数据，过去5年，微软年均增长18%，比特币62%，资本成本标普500为14%，债券回报率-5%。以资本成本为基准，微软每年跑赢标普4%，比特币跑赢48%，债券落后19%。微软若回购股票，收益仅为买比特币的1/10；若买债券，10年将损失99.7%的资本。反观我们用比特币背书资产负债表，去年融资226亿美元，今年101亿，资本持续流入。微软的传统策略，买国债、回购股票、分红正在摧毁价值。过去5年，微软放弃2000亿美元资本，这是人类历史上最伟大的财务成就之一，却将其散尽，导致股权弱化、流动性枯竭、期权市场萎缩，反而放大了投资者风险。而比特币在2024年 SEC 批准比特币 ETF 公允价值会计准则落地，成为债券替代品，标志着数字资本元年开启。如今企业资本化的3种货币选择：1. 短期国债，20世纪货币；2. 黄金，19世纪货币； 3. 比特币21世纪货币债券的流动性、可替代性资本资产替代品。微软面临选择：固守传统金融策略，国债、回购、分红将导致资本流失，风险增加，增长放缓；或拥抱比特币作为数字资本，每年投资1000亿美元，降低风险，加速增长。过去5年，微软主动放弃2000亿美元资本，从胜利的边缘走向自我削弱，而我们用比特币实现了资本聚集。微软的风险披露显示，即便是全球最伟大的公司，也需承担政治、监管、竞争等多重风险，而放弃资本意味着削弱应对风险的能力。如何跳出恶性循环？当风险爆棚时，企业会压榨员工，强迫客户签订长期合同，打压竞争对手，最终引发监管诉讼和政治干预，形成分裂与压力的恶性循环。而比特币是无对手方风险的资产，若想规避竞争对手、国家、企业、货币、文化等风险，唯有选择不暴露于任何单一风险的比特币。如果你能以1倍营收收购一家年增长60%、利润高于自身的公司，会怎么做？当然会买。如果能每年重复这一过程呢？比特币就是通用永续盈利并购伙伴。传统投资银行会在你对业务绝望时建议杠杆收购私有化或转型并购，推销5至10倍营收、无增长的公司，而我提供的是1倍营收、30%至60%年增长的白菜价资产，这是史上风险最低的企业收购，却被共识视为高风险。我们用 Bitcoin 24模型分析微软，将其现金流导入模型，模拟不同场景，用现金流购买比特币，取消分红改买比特币，用比特币抵押借贷等。结果显示，每股价值将增加155至584美元，企业价值增加1万亿、5万亿美元，同时降低风险。秘诀很简单，停止散财，用硬资产比特币支撑股权价值。富人的财富源于资产，而非未来现金流预期。我宁愿投资拥有资产的公司，而非散尽资金却承诺更努力涨价的公司。采用比特币标准后，微软的年度经常性收入增速将从10%提升至16%，为股东创造价值，只需拥抱新的资本理念。这不仅对微软有益，对客户、员工、国家、世界乃至企业文化都有好处。选择比特币就是选择正确的道路。尽管我向微软全力游说，但投票结果显示，99%的股东反对研究比特币策略。这就是共识的力量。全球最强大的公司不需要比特币，但你需要。这正是比特币的美妙之处。当巨头无需改变时，中小企业反而拥有逆袭机会。最后，我用比特币21条规则中的第11条结束：比特币洞见只属于有迫切需求的人。你的公司需要知道吗？你的比特币故事将如何书写？
I am delighted to get the opportunity today to speak with you about my favorite subject, which is Bitcoin for corporations. Why should your corporation recapitalize on Bitcoin? And leading up to this presentation, I had my team, my talented finance team, working alongside my 3 devoted AI assistants, do a lot of research in order to explain this topic to you today. So I want to start with the challenge that every company faces. If you've been living in the 21st century, you know that the winners are the digital monopolies. Apple's winning, Meta is winning, Google is winning, Microsoft is winning, Amazon is winning. The more unpleasant part of this observation is that the price that we pay for Amazon to win is 20,000 retailers have to lose. And the price we pay for Apple to win is 20,000 device manufacturers have to lose. And the price that we pay for Google to win is 20,000 journalist organizations, media, newspapers have to lose. And you can see from this chart, the Magnificent Seven are certainly winning. The 500 greatest companies in the world, that is, out of the 400 million companies on the planet, the 500 greatest companies in the world are getting smoked by the Magnificent Seven. They're struggling. And I spent many years in the public market If a public company can't grow organically 15% a year or more, institutional investors lose interest. The liquidity in the stock dries up, the liquidity in the equity disappears, and then the options disappear. And I remember when it used to be everybody's dream, I can't wait to go public. Start a company and your idea was, if I could just go public, I will have made it. And what I'm saying is going public is just the next step. But what you find is even if you do go public, unless you can keep up with the Magnificent Seven, you're not making it. Another way to look at the world today is in the public markets, most companies in the public market are what I call zombie companies. They don't have much liquidity. They don't have an options market. They can't beat the S&P index. They can't retain earnings. They can't raise capital. They can't take risk. They're trapped in this paradigm where the capital is toxic, volatility is toxic, inflation is toxic. And this is the dilemma that we face. You can actually see it playing out if you look at a list of publicly traded companies over the past 20 years. This is publicly listed companies in the US, and you can see how they've been getting ground down. It's not a chart of success. If I showed you anything in the modern world and the chart went down and to the right, you would say this is failure, or this is a gradual progressive slide to malaise. We're just not creating healthy companies. Now, it's not just public companies. If you take a snapshot of all the companies in the world, there are approximately 400 million companies in the world, small private companies everywhere. There's 400,000 large private companies. There's 40,000 listed companies in the world. 4,000 listed companies on the major exchanges in the US, the NASDAQ, the NICE. 400 seasoned issuers. And probably many of you don't actually, how many people in the audience know what a seasoned issuer is? I'm interested just for my own awareness. Okay, you're going to learn something new today. A seasoned issuer is a public company that is deemed seasoned enough, mature enough, to be able to file a registration statement with the SEC and sell securities the same day. So another way to say it is 400 companies out of 400 million companies can raise capital in the United States and the world's greatest capital market without friction. It doesn't seem quite egalitarian. 400, 1 in a million. 1 in a million. It turns out that 0.06% of the businesses in the US are able to tap the capital markets. So if you're in business and you're struggling, the conventional wisdom is if you were just better and worked harder, you'd be succeeding. But you can see that the traditional capital markets, they're structured to be exclusionary and elitist. Maybe this has gone back thousands of years. You can definitely trace it to the SEC Act of 1933 and 1940, when the intent of the act was to cut off access to the capital markets to businesses deemed to be, quote, too entrepreneurial, unquote. So here's the hard truth about publicly traded equities. If I expand my view from New York Stock Exchange and NASDAQ to, all the over-the-counter publicly traded securities, there's 12,000. Of those 12,000, 15% can beat the S&P index. 15% beat the index over the course of a decade. 12% of them have a stock that's got more than $10 million a day of liquidity. 83% of all the trading volume in the stock market in the United States is 100 stocks. When you watch CNBC and it's like NVIDIA, Apple, Google, Meta, NVIDIA, Apple, my opinion of Apple, My opinion of NVIDIA. My opinion of the 2x NVIDIA ETF. Apple, 2x Apple. NVIDIA, Meta. Gold, Bitcoin, Bitcoin, Bitcoin. And if you're waiting for your favorite company to pop up, it's not going to pop up because the television knows that people just want to trade these 100 things. 8% of those companies have an option market. 8%. Okay, here's the painful one. All of the wealth created in the stock market comes from 4% of the public companies. 96% of these companies have performance equivalent to a treasury bill. That's brutal, right? 96% of the companies can't beat a T-bill. Here's a snapshot of stock performance of the S&P. So we pull the 500 companies. These are the greatest 500 companies in the world. Look at them on this distribution chart. What you can see is that the Magnificent Seven, they're up 221% over the past 4 years. S&P is up 67%. 96% of the S&P companies are underperforming the Mag 7. 96%. 68% can't beat the index. Bitcoin is for the rest of us. It's for the 96%. If you're not Apple, if you're not Google, if you're not Microsoft, then you need to come up with a strategy. And as you can see, it's probably not going to be working harder. Here's a distribution of those companies based on market cap. The average S&P company, $35 billion market cap. The Magnificent Seven, $2.4 billion. So they're not quite 100 times bigger. You got 7 companies that are 100 times bigger. You've got all these other quote unquote big successful companies. They're at 1 to 2% of the size of the winners. This is liquidity, you know, and so if you're looking at liquidity as a percentage of market cap, what you can see is that the average is 1%. So 1% of your market cap is liquid every single day. Our company, of course, off the chart, 7%. Here's volatility. Well, business school teaches you volatility is a bad thing. And so everybody's sent out of business school with a mission to strip the volatility from the balance sheet and then spend their entire life stripping the volatility from the P&L. And you could almost say they succeed. I mean, they've done a pretty good job. Look how many have volatility less than the S&P index. You know, by the way, who has more volatility than the S&P index? Every rich person you admire. Every wealthy person in the world has volatility more than the S&P index because they didn't strip the volatility from their balance sheet. Bernard Arnault and Jeff Bezos and Mark Zuckerberg and Elon Musk, the people that we're supposed to aspire to, have massive volatility. And yet these great, well-run companies in the world are going out of their way to strip their volatility. The number one way to strip your volatility away, by the way, is give away all your money. Like if you want to strip the volatility from your family's balance sheet, give all of your family's wealth to charity. If you want to strip the volatility off of a company, then you take all of the capital, all the cash flow of the company, and you either buy back the stock or dividend it out or give it to somebody else. And it works. But again, the idea, it's kind of, you almost can't make this stuff up, right? When you present it that way, it's I have a strategy. If I just give away all my wealth, I don't have to worry about losing it. Think about that. Here's a distribution of open interest. This is the interest in the options market as a percentage of market cap. And what you can see is maybe people want to trade Tesla and NVIDIA. I mean, they read about them, we speculate about them, we gossip about them. There's something to trade there. But, you know, for the most part, the S&P 500 has very small open interest, and companies that are small in the S&P oftentimes don't have any option market. Billion-dollar, multi-billion-dollar companies, there is no option market. And by the way, if your strategy is get rid of all the volatility on the balance sheet, You'll never accidentally make $50 billion like Elon Musk does or like Jeff Bezos does. You'll never accidentally have anything you own trade up. And if your strategy is strip all the volatility from the P&L, we'll just sign our customers to 3-year enterprise agreements and renew them a year in advance and put a CPI or PPI escalator on it. Once you've done that, the question is, why would I bother to ever trade the stock? I could tune in once a year, make a decision, and forget about it. The only volatility you're getting in that case is negative volatility when something goes wrong. And this is how that strategy transforms the performance. Note that by stripping away the volatility from the P&L and the balance sheet, the companies also effectively strip away the performance. And you can see how our company strategy is an outlier here. There's a few sparks, but for the most part, and again, this is the top 500 companies, we're struggling. And another way to say it is most companies, they're struggling to compete and they're dying slowly. 85% of the U.S. listed companies have less than $10 million of options interest. 75% have less than $10 million in daily trading volume. 85% are destined to underperform the S&P 500. So if you're in one of those companies or you're running a company or you hope to start a company, the issue is, how do you break free? How do you actually overcome this structural disadvantage? Everybody in the world talks about AI. If you walk down the street and you ask 100 people, do you think AI is a good idea? Most of them would say yes. Every CEO's got an AI plan. Every investor wants to know your AI strategy. And it's sexy and it's fun and it's critical, but it's not the solution to the problem. AI is not the solution. Why? Well, first of all, because everybody agrees that you should use it. Everybody agrees. It's a consensus idea. Everybody agrees you should use AI to cut your costs, improve your products, and grow your business. We all agree on it. Well, that just means 400 million businesses are all agreeing to use the same technology to do the same thing at the same time, right? Where's your edge? Here's what's going to happen with AI. The rich are going to get richer. The famous are going to get more famous. The powerful will get more powerful, right? This is going to be a big benefit to Microsoft and to Apple and to Google and to all your famous celebrities, and to Tom Cruise. If you've got a famous brand, if you've got a distribution channel, you're the beneficiary, those with money and power. And however, if you're trying to start something up, there'll be 10,000 AI startups, 100,000 AI startups, a few AI unicorns. And when I say unicorn, I mean 1 in 10,000 companies. There'll be a 99.9% failure rate or 99.99% failure rate. But you'll have some pure play AI unicorn startups, and they will disrupt entire industries. They will destroy thousands of companies. They will change the world. You'll have robots making robots. You'll have someone launch some product to provide the work of 187,000 accountants. You'll have interesting things. Many will fail, but something will succeed. But here's the bad news. It's more likely that your company will be the victim of that trend than the beneficiary of that trend. At the end of the day, this is a steamroller. It's coming. But if you're not the unicorn, and if you are not the digital monopoly or the most powerful company in your country or in your industry, then AI is feeding the rich and powerful. It's not feeding you. It's just turning the screws to you. So consensus thinking, it won't elevate the average company. AI, it's not that it's a bad idea. It's a good idea. AI is a necessary condition for success. You won't stay in business a decade from now if you haven't embraced it. There's no doubt. It's a necessary condition. It's just not sufficient. It is necessary, but not sufficient. You have to embrace it, but it's not going to save you. Bitcoin is the solution to the problem. And why? Well, because very few people agree. because most people don't think it's the solution to the problem. Few agree that you should use Bitcoin to capitalize your business. Now, you don't have to take my word for it. You can literally go out on the street. You can ask 100 wealthy, well-educated people. Go ask any, business school professor. The majority will say, it sounds risky, not a good idea, increases the risk. You go ask the same people, should I use AI in my startup? They're like, absolutely. Okay. The consensus technology is digital intelligence. The paradigm shifting technology is digital capital. Digital capital will save your company because everybody else doesn't understand it, because the mainstream has not yet embraced it. You get to be first. Or in the words of Peter Thiel, and this is probably the most important quote I'm going to put on the screen today: courage is in much shorter supply than genius. I can show you geniuses. There's 8 billion people on the planet. You can find 8,000 people that are the smartest one in a million. You can't find 8,000 courageous businesses to do what I've described. You might think that you've got an IQ 200. You know what people with IQ 200 do in this world? They come up with 100 reasons to not buy Bitcoin. They come up with, they can write books, everything that can go wrong. Well, I can hypothetically imagine that this might be a problem 10 years down the road in that circumstance, and so that's why I will not do it. People lacking courage apply their brilliance to apologize for why they're not going to take the risk. And so this is not about being smart. This is actually about having some courage. Success comes from a willingness to acknowledge reality. I was just showing you some reality, right? Is your business going to all of a sudden start growing 20% a year forever and grow past the Magnificent Seven? Well, again, if you haven't acknowledged that reality, then you won't embrace a new idea, right? You're not winning in the status quo. You need a paradigm shift. Embrace the new idea. Then you have to do the work. Doing the work requires a lot of study, a lot of research, a lot of careful planning. And at some point after all that work, take a risk. And if you do take a risk, then you have to execute. But your path out of this is acknowledge reality, embrace the idea, do the work, take a risk, execute. And what's it mean to do the work? Well, you're doing work for 40 years of your life. You're working. That's, 80,000 hours of work to make money. The great irony is every single person in the economy spends 80,000 hours working. Trying to get someone to spend 100 hours to figure out how to keep their money, that's actually challenging. But what I say is spend 100 hours learning how to keep the money that you generated over 80,000. Now, if you're the CEO of a company with 10,000 employees, I want you to imagine 10,000 times 80,000 hours working very hard and then losing all the money. Well, practically speaking, that's what's going on in the world today. It's going on thousands of times everywhere in the economy. Spend 100 hours learning to debunk the 100 criticisms people come up with. Well, I'm worried about this. I'm worried about that. What if Satoshi is a CIA dude? What if Dr. Evil gets a quantum computer? What if? Oftentimes when people get past it's tulip bulbs, they go to the argument, well, it's too good to be true, so the government's going to take it away from you. That's literally the giga-brain objection. You're right. It will solve all my problems, but it's going to solve them so well, it's too good to be true. So somebody more powerful than me that hates me will just take it away from me. So I think I'll just not try. After a bit of work, you conclude that money decomposes into capital and currency. The conventional thinker will tell you money is a medium of exchange, a unit account, a store of value, and they'll stop and they'll act like they just solved the problem. It's like, this is why you don't want to teach people to brainlessly repeat stuff that they learned in school. Well, the truth of the matter is, when you think about it, you realize that high frequency money versus low frequency money varies. So if I want to spend the money for the next 4 weeks, I'm going to use the peso in Argentina. It's a super, super high frequency money. If I want to hold the money for 4 weeks to 4 years, I'll use the dollar. It's the world's reserve currency. Those are mediums of exchange in the world. But if I want to hold the money for a decade to 40 years, I'm going to use an asset like real estate, like gold, like equity. And if I want to hold the money for 10 years to 100 years, I better have a very durable asset, one that's going to last 100 years. So when you put money on that spectrum, you can see that on one side is capital. It's long-term store of value money that I'm going to give to my children's children. And on the other side is currency. It's high-frequency, convenient medium of exchange money. And once you get that, you realize there's a hierarchy of capital assets. I can use a weak currency to store my company's money. I can use a stronger sovereign debt. I can use strong currency. I can use investment grade debt. I can have a 60-40 portfolio. I can invest in the S&P index. I can buy a bunch of commercial real estate. And at the top of that hierarchy, just about everyone that studies this concludes Bitcoin is better gold than gold. Bitcoin is better property than physical property. Bitcoin is a better tech equity investment than any company equity. Bitcoin is the apex capital asset. And if you can't derive it from first principles, then you just look at the market indexes. And so here I'm showing you the average performance of companies in each of these indexes. So look on the far right, that's the Russell 2000. If you're a Russell 2000 company and you generate cash flow and you buy your own stock back, you're generating a 5% return statistically. You would be better off to buy the S&P index than buy your own stock back, right? If you're an S&P company and you buy the S&P index, or if you buy your own stock back, on average, you're generating a 10% return. The companies like the Mag 7, when they buy their own stock back, they're actually outperforming the S&P because they outperform the S&P. So they're capturing a 31% return. But nobody's capturing the 79% return of BTC. So if you're that Russell 2000 company, instead of buying your stock back, buy Bitcoin. Instead of 5%, you get 79%. Right? And instead of dividending out your cash flows, you bought Bitcoin. You know what you're doing when you do that? You're buying a company at 1 times revenue that's growing 79% a year. If I gave you the chance to buy a digital monopoly, a global digital monopoly growing 80% a year for 1 times revenue with the cash, would you do it? The answer is everybody would do it. Everybody would do it. There's not a single company on earth that wouldn't buy a high growth monopoly growing 20, 30, 40, 50, 60, 70, 80% at 1 times revenue. Well, it's right there, right? That's the asset. You might think I cherry picked the numbers. Well, this is the 10-year performance slices for every 10-year period, from 08 to 18, all the way to 2014 to 2025. And you can see Bitcoin is just continually outperforming. The worst 10-year stretch it ever had was 50%. Well, what if you just hire the smartest money manager in the world to actually manage your money for you? Can you outperform it with people with PhDs? Or look at the performance of all the endowments of the Ivy League. All of the money managers running the endowments of Harvard and Yale and Stanford and MIT, they're actually underperforming the S&P by 3%. That is to say, if they all stopped doing anything and you just put your money in the S&P, they would improve performance by 50%, right? All of the gigabrains doing smart performance, for the most part, they just can't beat the simple index. They're destroying value. And what you see is Bitcoin against all these strategies just keeps beating it over long periods of time. There's nothing you can find here that's compelling. So what is Bitcoin? Well, Bitcoin's the best strategy. The best strategy for what? The best strategy to create shareholder value, the best strategy to grow your company, the best strategy to make money for your investors, the best strategy to keep your company in business forever. What's the second best strategy? You could wiggle your nose and cast a spell and hope that you're NVIDIA. There is no second best strategy, all right? You've got one thing that's giving you 56% a year for the past 5 years or so. If you look to the far right, what's the worst strategy? The worst strategy is buy long-dated sovereign debt, like long-dated. By the way, this is not quite the worst. The worst strategy is buy a weak currency or a collapsing currency or international bonds and a collapsing currency. You're going to lose all your money in 3 to 5 years. That's the worst strategy. The worst strategy in the U.S. is buy long-dated treasuries. Who did that? Silicon Valley Bank did that. It bankrupted them. Most banks did that. They would all be insolvent if they weren't given a waiver by the Fed. There's an irony, of course, that the government actually mandates that banks use those treasuries as their capital asset. It turns out that that regulations in the capital markets keep a company from capitalizing on securities. That's why Google can't buy the S&P index. That's why companies can't buy portfolios of stock. That's what they knocked out of the system in 1933 with the SEC Act. If you read Rothbard's Conceived in Liberty, there was a lot of maneuvering politically in D.C. between the Rockefeller interest and the J.P. Morgan interest. And this was a big win for the Rockefeller interest against the J.P. Morgan interest. And we had Roosevelt, who was more of a central planner socialist, and it was his way to put the bankers in New York and the capitalists in their place and centralize control of the capital markets. And one simple way to do it is just make it illegal for a company, a public company, to buy stock in another public company. Well, you look at the chart here, and what you can see is that most companies would have been better off to have just bought gold and capitalized on gold. Gold's the 19th century store of value asset. But, of course, they didn't. They can't capitalize on the S&P 500 or the Magnificent Seven. So what you have is one strategy gets zero yield with short-dated treasuries. The other strategy, you get 55% or 56% with Bitcoin. And I guess if you're a gold bug, you buy gold, but there's no consensus there to do that, and that's never happened. Now, Bitcoin happens to be the best performing uncorrelated asset. You can see the numbers, right? It's not correlated to risk asset. It's got the highest Sharpe ratio. And all of the things I've laid out have created a trend. And the trend is more and more public companies are beginning to buy Bitcoin and put it on their balance sheet. When we bought it in 2020, we were the first company to buy any material amount. Now you've got 70 publicly listed companies. You've got $68.5 billion of Bitcoin. You've got more companies coming every week, every month, everywhere in the world. And that takes me to the MicroStrategy story. What is the MicroStrategy story? Well, in August of 2020, we faced reality. We had tried everything under the sun, buybacks. We had tried spending massive money on marketing, massive money on sales, expanded our sales force, expanded our technology function. We launched, dozens of new businesses. We've wound them down. Every possible strategy you could. None of them worked. And when the lockdowns hit, we realized we were looking at a fast death or a slow death, or we were going to have to take a risk. And so we decided to take a risk. And when we did it, our stock was about $12 a share, and $6 of that was cash. So the enterprise value of the company was $6. When we did this slide, it's $394. So you can see we could have sold the company for an enterprise value of $6 to $8, or we could go ahead and take a risk and embrace a new idea. And we decided to do that. You can see our trading volume is 5 million a day. Our trading volume now is 5.9 billion a day, right? I mean, you could see our open interest was $1 million in the options market. Today, 96 billion when we took the snapshot. We weren't volatile. We were very predictable, predictably uninteresting. And the sad fact is we were actually making a lot of money. We were generating $75 million a year in cash flow on a $500 million P&L or a $500 million revenue stream. The company was that zombie company. It's not poorly run. It's well run. It's just you're competing head to head with Microsoft, and Microsoft has a chokehold on every business on earth. I would submit to you, it would be easier for you if you were an American company. It would be easier for you to leave the United States than it would be for you to leave Microsoft. Think about it. Right? I mean, that's how powerful that company is. And so we started with a $250 million commitment, and we persisted. And over time, the capital markets rewarded us with $26 billion of additional equity. In fact, we were able to raise $37.5 billion of capital, starting with a $250 million commitment, right? Clarity, conviction, courage, commitment. Move forward. The world wants you to win. The world, what you will find is your customers will get behind you, your investors will get behind you, the capital markets will get behind you. These Mag 7 stocks, right, that basically dominate everything, most investors, they're overexposed to them, and so they would like to find something else to invest in. And you know what? Do you know what the CFOs of the great companies of the world brag about? They brag about surrendering their capital. They basically brag about how much stock they're going to buy back this year. So what they're saying is, we created the world's greatest company, and we've got all this money, but we don't know what to do with it, and so we're just going to give it back. So you're the investor, and you're getting showered with hundreds of billions of dollars a year of capital from Microsoft and Apple and NVIDIA. You have to put it somewhere. And so what I'm saying, and what our company became, was a place for the capital to flow. And this is where being non-consensus thinker makes a difference. See why every other great company that you love that's well run is doing their best to get rid of their money? The investors have to invest it somewhere. So our business strategy is to collect money, right? We're actually positively polarized to the capital. We're attracting it. These other companies are negatively polarized to capital. They're repelling it. And you can see that manifested in 2024, where a company that had $500 million in revenue in 2020, and we could maybe generate 50 to 70 million in earnings a year, we raised $22.6 billion last year. And you can see this year, we raised 10.1 billion year to date. Who's giving us this money? Investors. Why? Because they want to make money. Why? Because Apple doesn't want their money. Meta doesn't want their money. NVIDIA doesn't want their money. Okay, all of these great companies don't want their money. And then all the other companies can't beat the monopolies. You're not going to want to give them your money. I want to actually invest in this unicorn, this digital monopoly that's hyper growth, that's fast, and I want to put my money there. Well, what I'm saying is you can make your company that digital monopoly if you do a merger with Bitcoin. And that's what our company did. We did a merger with Bitcoin, and the great thing about this merger is you're merging, at 1 times revenue. And you can reverse it. You can buy 100 million, you can buy 10 million, you can buy $1 billion. Next year you can buy another 500 million. You can buy 20 million. If you're a cab driver in Nigeria, you can buy $27 worth. You can merge with Bitcoin as much or as little as you want. It's a reversible transaction. The fees are quite reasonable. And the return? Well, here's how we perform against everybody else. And it's what I say. If you want to 10x your money, you buy Bitcoin. If you want 100x your money, you buy Bitcoin with someone else's money. If you want 1,000x your money, you buy Bitcoin with someone else's money, and then you leverage the Bitcoin. It's not complicated. It's not even risky, in my opinion. It's just novel. And so that's what we did. And this is the result in 4.5 years. And what you can see is the only company that outperformed Bitcoin over this time period is NVIDIA. You have to invent intelligence. All 499 of the other companies, every other company on earth underperforms Bitcoin except for NVIDIA. And if you can copy NVIDIA, have at it. But if you can't copy NVIDIA, you can merge and you can be Bitcoin. And then once you've merged an operating company with Bitcoin, the way you outperform is by being public and issuing equity or credit instruments and taking advantage of the fact that securities are treated better than commodities in the investor markets. We haven't just outperformed over the past 4.5 years. We've outperformed the last year. So this is the last 12 months. You think the strategy is running down. Not quite running down. You can see what happens if you actually capitalize on Bitcoin. The S&P is up 12%. We're up 249%. Our eternal champion bonds up 2%. Right? And by the way, you can be a great company, like Google's a great company. That's no guarantee the stock's going to perform. At the end of the day, the problem with companies is they have attack surfaces. They have a lot of complexity. They get tariffs. They get antitrust actions. They get unionized. Ultimately, every force on earth is trying to drag the company's performance back to the mean. It's trying to actually drag you back, and the more successful you are, the bigger the target you are. That's why it makes so much sense to partner with a decentralized network that doesn't have a CEO. Well, what about the last 12 weeks? Well, we've gone through the tariff tantrum. Guess what doesn't get tariffed? Right? Bitcoin. No tariffs on Bitcoin. Right? Or another way to say it is all these companies are struggling because they do a lot of stuff. And to paraphrase the Tao of Steve, doing stuff is highly overrated. Okay? The more stuff you do, the more exposure you have to fire and flood and war and tariff and supply chain and regulatory action and politics, et cetera, et cetera, et cetera. So if you look at this report card, what's happened? Well, right now we have over the last 5 years, we have the #1 return out of the S&P 500 universe. We've got the #1 options market in the entire crypto complex. The #1 return, over the Bitcoin standard era, the #1 volatility, the #1 options market is a function of market cap, the #1 Bitcoin position. And you can see, our trading volumes are 6 billion a day. Now, why else is this going to work for your company? Because companies can do something that individuals and trust can't do. Institutions can't do this. Families can't do this. Companies can issue securities. Companies can issue credit securities like convertible bonds, like junk bonds, like investment grade bonds, like preferred stock, like equity, like warrants. These securities are in high demand. What you can see from this chart is the one way to turbocharge a bond is back it with Bitcoin. So our convertible bonds have a blended performance of 62% that outperforms Bitcoin. If you're buying Bitcoin, you're buying the most volatile asset, most volatile commodity in the world. And yet you can beat that volatile commodity with a credit instrument that gives you downside protection. And that's pretty amazing, because if you want to compare that to the S&P index or the NASDAQ, you can see it's 5, 6, 7x. But look at the other bonds in the world, high yield bonds that are issued by companies that don't have any money, that are struggling to scrape cash flows. They underperform by, in this case, 7% versus 62, by 85%. Look at other convertible bonds, right? It's not just issuing a convertible bond. It's like you want to issue a convertible bond with a crypto reactor in the middle. You want an energy source, a volatility source in it, and a performance source, right? And so simple converts are 4% performance instead of 62. And then investment grade bonds, 1%, you see. So we're able to do this because we're a public company. Your company can do this too. And then you look at this risk return matrix. The other thing an operating company can do is it can create equity, which is volatile, which gets traded. And then people will actually want to buy all the other credit instruments in order to get the upside with less downside. So what you can see here is all these convertible bonds and our preferred stock. It provides you with upside, but less downside than the common equity. So for the risk-averse investor, you're providing them an on-ramp to the crypto economy, right? You can give them 10% of the risk, 20, 30, 40, 50%. You can give them half the volatility. You can give them guaranteed yields. And there's a massive market for that. When you adopt the Bitcoin standard, you're able to create Bitcoin-backed securities, and there's $500 trillion of fiat-backed conventional securities in the market. I just showed you all the equity underperforms. I could show you other slides that would show you all the credit instruments, all the preferred stocks, all the investment-grade bond, they underperform, right? The preferred stocks are bought by people and they're just shoved in a portfolio, going nowhere. You're just waiting to die, right? There's nothing that's going to happen there. And the equity is like everybody knows there's a 90% chance my equity won't work out. They don't want to play the game. You have to change the game. So why don't we move on to the Microsoft story? What is the greatest company in the world? Probably Microsoft. If you look at Microsoft over the past year, 2 years, 5 years, 10 years, what do they sell? They basically license business process to every major company on earth. What's their hardware? No hardware dependency. They can swap out, the silicon. They don't have a difficult supply chain. Nobody can turn them off, and their customers are all very creditworthy, and they sell you 3-year enterprise licenses, and when it's time for you to buy their latest Teams or their latest whatever Microsoft product, they just add it to your enterprise agreement, and you agree to take it because you don't have a choice, right? And it's a well-run, super profitable, high-growth company. Whatever bad happens to them, they're just going to raise the prices to their existing customers and pass it through, and everybody will pay it. So that's Microsoft. I had the opportunity to present the case for Bitcoin to Microsoft about 4 months ago, or in December. And I made the following points. It was, to put this in perspective, it was a shareholder resolution, and the resolution says, we think that Microsoft should investigate the feasibility of a Bitcoin treasury strategy, right? That was the resolution. Do a research study on Bitcoin. And so there was a chance to present to the board of directors for 3 minutes, and I put this together, and what I said to them was, look, you don't want to miss the next wave. Digital capital is the next wave. The way you know it's the next wave is because it's growing 62% a year. It's going to grow past you in a bit. It's the most global, interesting asset in the world. Hundreds of millions of people are talking about it. The greatest digital transformation of the 21st century is the transformation of capital. You're supposed to be in the digital transformation business. This is the transformation of capital. Right? Global wealth is spread across $900 trillion of assets. Bitcoin is $2 trillion. Most capital is divided between long-term capital. That's the store of value assets you just hold to keep your money. And then other assets held for utility. The building you need to work in, the warehouse, the working farm, the stock you're holding for dividends. When you see the world that way, what you realize is that risk factors are destroying the long-term capital, right? Your capital is being destroyed by taxes, by inflation, by tariffs, by insurance, by torts. culture shocks, regulation, antitrust. Every single 10K has got 30 pages of these disclosures in them. And so that long-term capital, it's transforming into digital capital because there's no fires in cyberspace. There's no hurricanes in cyberspace. There's no tariffs in cyberspace. There's no war in cyberspace. Why don't you just move your money someplace where some politician is not going to take it away from you, or some war isn't going to deprive you of it, or lightning's not going to strike it? Because at the end of the day, Bitcoin succeeds based on a simple premise. A bunch of smart people in the world would like to keep their money. Period. That's the idea. Right? Who's buying it? The smart money. The smart money everywhere in the world is buying a digital network to keep their money. That's the idea. Digital capital is, it's better. A digital building is better than a physical building. Everything you hate about the building, that it's visible and the mayor can rent control it and weather can strike it, everything you hate about it goes away. And instead, the building becomes invisible, indestructible, immortal, and teleportable. Everything that makes it better, you add in. Everything you don't like, it goes away. Bitcoin is the immortal asset. It's the asset that lasts 1,000 years. You want to keep your money 10 years? You want to keep your money 3 years? You buy a crappy currency. You want to keep it 10 years? Buy a strong currency. You want to keep it 50 years? Buy some kind of company or equity and worry about it for 50 years, or buy some property. What if you want to keep your money 500 years? How do you do that? You can't do it with any conventional asset. You can do it with Bitcoin. Bitcoin is the longest lived capital asset in the history of the world. How many people want to be rich forever? Right? I mean, why wouldn't you want to be rich forever? Bitcoin represents economic immortality. It represents the quest to make my company live not a decade. The average life expectancy of a company, by the way, is like 10 to 15 years. If your kids died at age 12, right, you don't think that's a health problem? So what if I told you the reason your kids die at age 12 is they drink dirty water? And I said the solution is drink clean water and they'll live to age 90. Would you change? Right? The money is the money is the fluid. It is, you're running on toxic capital and you want to live forever. You need clean money. So what do we see? We see an industry that's growing from 2 trillion to 200 trillion. When Bitcoin is a $200 trillion asset, what is it? Okay, well, it's still going to be smaller than equity and real estate and bonds. It's just going to be noticeable. It's the emerging global monetary asset. It is digital gold. It is 10 times better than gold, maybe 100 times better than gold. And it is the most powerful, secure computer network in the world. It's fitting in the 21st century. If you want to create a digital commodity, you put it on a computer network, you protect it with electricity, you protect it with computer power, and you spread it to everybody everywhere on Earth. That's what Bitcoin is. It is digital capital. Everything digital is better. Digital pictures are better. Digital relationships, digital messages, digital documents, digital videos. Digital is always better, right? You don't believe me? Ask Kodak, right? It's like digital is better, right? Ask Polaroid. Microsoft should be powered by digital capital. And Bitcoin is the highest performing uncorrelated asset. So you're going to hold something on your balance sheet that's not correlated to everything else. So let's look at the charts. Microsoft is up 18% a year for the past 5 years. Bitcoin's up 62%. What's the cost of capital? The cost of capital is the S&P 500. It's 14%. That's what you're judged against. How are bonds doing? They're down 5%. Now, what if I normalize this against the cost of capital? So what you can see is if S&P 500 is the baseline, Microsoft is outperforming the S&P by 4% a year. Bitcoin is outperforming by 48% a year. And bonds are underperforming by 19% a year. So Bitcoin is outperforming, Microsoft is going to do a buyback. Buying Bitcoin would be 10x better than buying your own stock. What happens if you, is there a way to go back here? Can you move the slide back? I guess got no back button. Okay. Well, in any event, if Microsoft buys bonds, you're destroying 99.7% of your capital over 10 years, right? That's the problem. Bonds are toxic, but buying your own stock destroys 97% of your capital. So you're going to destroy 97% of your capital buying the stock of MSFT versus buying the Bitcoin. And if you want to outperform, you want to reverse the transaction. You put Bitcoin on the balance sheet. What's the secondary impact of capitalizing on bonds? Because that's what Microsoft does. It decapitalizes, it gets rid of all of its cash flow, and it uses bonds for short-term as its primary treasury asset. So the result is you reduce your options open interest by 98%. Compare the open interest in MSTR to the interest in Microsoft, 98% less. You reduce the liquidity in your stock by 99%. What they're doing is they're denurturing the company, right? But you're not realizing it. Who's losing? The people holding the equity are losing because the equity becomes much weaker collateral. If it's not volatile, then it's not as valuable to hold. And if it's not liquid, then it's not as good collateral to hold. And Bitcoin, of course, emerged as the alternative to bonds in 2024. That was the point at which the SEC endorsed the Bitcoin ETFs. That's the point at which you could see FASB fair value accounting was coming. That was kind of year 0. We're now in year 1. There's three, if you define money as a liquid fungible asset, there's 3 monies that you can use to capitalize a company in this world today. There is treasury bills, sovereign debt that is, but generally short-dated treasury bills. There's gold, and there's Bitcoin. Yeah, you've got 19th century money in gold. That was the best idea in the 19th century, gold. You've got 20th century money in treasuries and sovereign debt, and Bitcoin represents 21st century money, liquid fungible capital asset, alternative to bonds. And so you have a choice to make at Microsoft. You can cling to the past, which is conventional finance strategies. Use treasury bonds, do stock buybacks, dividend out your cash flow, or you can embrace the future. You can take innovative financial strategies based on Bitcoin as a digital capital asset. The first choice is a regression. You're divesting yourself of $100 billion a year. You're increasing investor risk and you're slowing your own growth rate. The second choice is a progression. You're investing $100 billion a year in your enterprise. You're decreasing the risk. You're accelerating the growth. If you look over the last 5 years, Microsoft surrendered $200 billion of capital. They literally won it. How many companies on earth ever generated $200 billion in after-tax cash flow? Right? It's like, it's got to be one of the 10 greatest achievements ever. They won and they snatched defeat from the jaws of victory. They took the money and what did they do with it? Give it away. What are we really doing? Well, we're dividending it out. That's one way to get away, and we'll buy our stock back. That's another way to give it away. What happens when you do that? You amplify the risk factors in your own prospectus for your own shareholders. You're now facing these are actual risks that Microsoft publishes to the world. These are the risks that the world's greatest company takes. Every investor has to assume these risks if they want to use Microsoft stock as a long-term store of value. What Microsoft did was they made sure they had $200 billion less capital to deal with the risks. And they probably decreased their enterprise value dramatically. So you're actually levering the company on the future risk. How do you escape the vicious cycle? When you get that much risk, you know what you do? You put massive pressure on your employees. Then you put massive pressure on your customers. Then you force your customers to buy products for 3 years when they only want 1 year. You force them to buy everything when they only want some things. And you lever your competitors. They complain to the regulators and the politicians. You get sued. Everybody gets angry. Then you go and you engage in the political process. It's a very divisive, stressful dynamic. And if you were to sit in the boardroom of Microsoft and say, well, why do you have to force everyone to sign a 3-year contract or whatever? The answer is because we get a lot of risk. We're trying to strip the volatility off of the earnings forecast for 12 months from now. Well, Bitcoin is the asset without that counterparty risk. You want to get away from counterparty risk to competitors, countries, corporations, creditors, currencies, or cultures. You got to find something that's not exposed to any of them. And that's Bitcoin. So, if you could buy a $100 billion company growing 60% a year at 1 times revenue, and if it was more profitable than your own company, would you do it? Of course you would. What if you could do it every year? Forever, right? Bitcoin is the universal, perpetual, profitable merger partner. And I'll tell you, the conventional investment banker will tell you when you've lost hope in your business, you either do an LBO and you take yourself private, or you got to do a transformational acquisition. And they're pitching you on buying something at 5 times revenue or 10 times revenue that's not growing. I'm giving you something which is dirt cheap, 1 times revenue that's growing 30 to 60% a year, right? It doesn't get better than this. The great irony, it's the least risky corporate acquisition imaginable, and there's perception by the consensus that it's risky. So let's evaluate Microsoft's options, right? There is a Bitcoin 24 model. You can grab it from GitHub, pull it down, plug your own business into it. We plugged in the Microsoft business, we plugged in their cash flows, and then we actually put together a set of scenarios. We said, well, what if you just sweep your cash flows and a little bit of cash and some treasury into it? Or what if you actually eliminated the dividend and you bought Bitcoin instead of paying the dividend? What if you replaced the buyback of your stock with the buyback of Bitcoin? What if you actually took a little thin layer of debt, like 10% of all the Bitcoin you own, you put on debt? And then what's the payoff? And the answer is it adds anywhere from $155 to $584 a share to the company, right? That's the share price creation. By doing what? By taking less risk. I'm asking you to add anywhere from $1 trillion to $5 trillion to the enterprise value of the company and take less risk. And and all you have to do is stop giving away the money, stop surrendering the capital. See, most equities are based upon the future expectation of cash flows. If you look at Microsoft, 95% of the equity value is future expectations. Well, if you start to buy Bitcoin, the equity value is backed by a hard asset, and eventually 41% or more of the value of the company is based on a tangible asset. Rich people aren't rich because of a future expectation of cash flows. They're rich because they own assets, right? I would rather be invested in a rich company than be invested in a company that gives away all their money but promises to work ever harder and raise the prices on their customers ad infinitum. Right? Think about it. It's not a good look. We work harder, we cut our costs, our customers pay more, so that we can support the stock. It's a road to serfdom in a way. And so Microsoft would prosper on a Bitcoin standard. You can see here, your ARR, goes from 10% growth rate to nearly 16%. You're increasing the growth of the company. You're decreasing value at risk. You're creating value. You're de-risking the entire equity. All you have to do is embrace a new capital idea. So do the right thing. It's good for your customers, good for your employees, good for your shareholders, good for the country, good for the world, good for your legacy. Adopt Bitcoin. That's my pitch to Microsoft. But what I would say is I didn't do all this work just for Microsoft. I did this work because everything I just showed you would be applicable to every other company on earth. Doesn't matter how big or small you are. It's the same exact message to 400 million companies. But for those of you who have followed me, you know there are 21 rules of Bitcoin. And I'm going to note rule number 11, Bitcoin insight is restricted to those with a need to know. You have to need to know this. So when this came up to a vote, 99% of all the shareholders of Microsoft voted against a proposal to invest or to study the feasibility of doing this. 99%. This is what I mean by consensus. And of course, why? The answer is it's the most powerful company on earth, right? They don't need it. They don't need the money. You need the money, right? And that's the beauty of this entire thing. Microsoft didn't have a need to know. And so I end this with just one question for you. Does your company have a need to know? And what will be your Bitcoin story? Thank you.